Hello everyone. This is the pre-market report video for today, 19th July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Today's pre-market video is all about Infosys. Most of us are aware of the news by now. Yesterday after market hours, Infosys released their Q1 FY 2025 quarterly results, which in turn made the Infosys ADR increase by around 8.5%. So in this video, let's discuss the Infosys results and then we'll talk about last night's US market. Additionally, tonight after market hours, Reliance Industries quarterly results and tomorrow HDFC Bank's quarterly results are scheduled to release. So we'll preview those as well. First about Infosys, if required, please pause and have a look. These are the numbers we need to know about the quarterly results on quarter-over-quarter basis. Now let me explain each. The highlighted ones are Infosys quarterly revenue in each metric. The first one is plain and simple revenue in rupee terms. The second one is revenue in dollar terms, since most of the Infosys revenue comes from outside India in dollars. Not in the last 2 years, but before that, every year roughly the Indian rupee depreciates 5 to 10% against the dollar. So at that time, because of currency depreciation, Infosys revenue might appear to grow around 20% on yearly basis. But the actual business growth might be only 10%. So for IT companies, in order to access the real growth, they declare the revenue in dollar terms as well. Now the final one, constant currency, meaning subtracting the inflation. Basically, they remove all the external influential noise factors. That aside, if you look at the actual numbers, in all three metrics, Infosys revenue grew by 3.3 to 3.7%, which is very positive, especially since these numbers are on a quarter sequential basis. Then the second positive is EBIT and EBIT margin. Both were better than the last quarter. The only negative was that compared to the last quarter, profit was down by 20%, but that's still above the analyst estimates, as most financial websites predicted a net profit around 6,200 crore rupees, but the actual value came near 6,400 crore rupees. So EBIT, EBIT margin and profit are also okay. The one main thing that made it really outstanding was the future revenue forecast. I still remember in the December quarter results, they dropped their revenue forecast from 2 to 5% to 1 to 3%, which in turn made the Infosys ADR drop by around 7%. Now they upgraded the revenue forecast from 1 to 3% to 3 to 4%, which is the main reason why Infosys ADR increased massively by around 8.5%. If converted into rupee terms, the arbitrage value comes to around 5.5%. So that's the value we can expect the Infosys to open today. Other than that, Wipro also increased by near 3%. However, the banks were not as positive as IT sector. ICICI Bank was up only by 0.55%, whereas HDFC Bank ADR was down marginally. So overall, the IT sector is clearly positive, whereas banks for now it's indicating neutral. Then coming to US market, the sell-off in large caps continued last night as well. Apple, Amazon, Alphabet, Microsoft and Netflix were down between 1 to 2%. As a result, all three major indices also fell. Dow Jones dropped by 1.3%, S&P 500 was down by 0.78% and Nasdaq decreased by 0.68%. In case of US VIX, it increased by 10% and moved around 16 from 14.5. Clearly, global momentum was not strong enough. In line with that, despite the Infosys rally, GIFT Nifty dropped to 24,818, which was 20 points less than the GIFT Nifty value at the time of the Indian market closing. So for now, GIFT Nifty is indicating a neutral to negative opening. These were the global market happenings yesterday. Let's move to new India related info. First, a preview of Reliance. If required, please pause and have a look. On quarterly basis, Bloomberg is expecting terrible Reliance results with revenue to drop nearly 2%, operating margin to contract by 280 basis points and net profit to decline around 7%. So if Reliance Industries results comes in better than expected, it could create a rally similar to Infosys. Let's see. Then for HDFC Bank, if required, please pause and have a look. On quarter-on-quarter basis, net profit is expected to decline by around 7% and net interest income is expected to decline by 1%. However, on yearly basis, both profit and net interest income are expected to increase by over 20%. and the net interest margin is expected to come around 3.4% with a very marginal decline in the loan book. These previews of quarterly results will define the Indian market in the next 1 or 2 weeks, so it's important to understand the results. Finally, about institutions, yesterday FIs were mega net buyers with net buying near 5,500 crore rupees. DIs net sold shares for 2,900 crore rupees. As a summary, US market was not good and is in a consolidation phase. In line with that, GIFT Nifty is indicating a neutral to negative opening. However, the Infosys results is really good. Additionally, there might be short covering as well as profit booking in both Reliance Industries and HDFC Bank. So these might save the Nifty today. Let's see. Then as per stock open interest, L&T Tech, SAIL, HAL, REC and BEL saw an increase in open interest along with a negative close indicating the short build-up. On the other hand, India Cements, India Mart, ITC, ONGC, TCS, Kotak Bank and Nestle saw an increase in open interest with a positive price close indicating the long build-up. Regarding the things to look out, on the earnings side, Reliance, Wipro, Ultratech Cement, Paytm, ICICI Lombard General Insurance, BEML and India Mart are some of the major Indian companies which earnings results are scheduled to release today. Then about macro data, during our market hours at 11:30 am, UK retail sales data and Germany's wholesale inflation are scheduled to be released. So these are the some of the items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap down. However, as the day progressed, it gained momentum and closed at a fresh all-time closing high 24,800. Thus on the daily chart, Nifty formed a long bullish candlestick pattern after the formation of back-to-back doji patterns with above average volumes. This is a positive indication and signals an upside breakout and also negates the recent bearish doji patterns. Additionally, the trend and momentum returned to positive with Nifty continuing its higher high formation for the fourth consecutive session and staying above all the critical short-term moving averages. Hence, in the short term, the trend is likely to be positive as long as Nifty stays above 24,500. On the higher end, the current trend might take Nifty towards 25,000 in the near term. In case of Bank Nifty, it opened 200 points gap down and saw a breakout of a downward sloping resistance trend line, raising hopes for a move towards 52,800 to 53,000 zone. However, finally closed at around 52,620. Thus, on the daily chart, Bank Nifty formed a bullish candlestick pattern resembling a bullish engulfing pattern after several days of consolidation. Additionally, Bank Nifty found support at 21-day exponential moving average 52,019 and RSI also gave a bullish crossover. Hence, as long as Bank Nifty stays above 52,000, on the higher end, it might move towards 53,000/53,300 in the short term. Regarding the weekly options data, the maximum call option open test was at 25,000 strike, followed by 24,800 and 24,900, with maximum new call option rating at 24,800 strike and then 25,000 and 24,900. On the put side, the maximum open test was at 24,800 strike, followed by 24,700 and 24,000, with maximum new put option rating at 24,800 strike and then 24,700 and 24,200. Thus, from options data, 24,800 is expected to play a crucial role in terms of further direction. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.